Folks, today I'm going to talk about non-traditional financial companies to watch. Now, we're now in the middle of December, and the markets are giving us tons of clues for those who pay close attention. Let me summarize some important factors for you. This week, we've got the final retail numbers for the year. If the numbers are solid, if the numbers are not rock solid, the odds of seeing a Christmas rally is reduced dramatically. Moreover, both the S&P 500 and the Nasdaq 100 are showing momentum levels we haven't seen in over 11 years. If that wasn't enough, the market seemed tired and diverging between classic oscillators. All in all, this is pointing to a rubber band that's stretched out and needs to snap back before expanding once again. Now, before we get too far into our discussion, I don't want to scare you into thinking that the market is going bearish. I don't think that's going to happen for some time, but it's not unusual for the market to contract before going higher, and I think that's what's going to happen over the next few weeks. Maybe, not a big correction, but a pause in the upside we've been seeing for majority of 2020 is the probable scenario, and I want you to be prepared. First, large cap tech is not the best place to be right now, especially with the Nasdaq 100 posting gains of over 47% in the last 12 months. That's right, 47%. These type of gains are just not sustainable in the long term. And I urge you to consider lowering your exposure on these large cap tech stocks. Now, with that out of the way, I believe there's some upside potential on a few non-traditional financial companies that could potentially hand us big gains, regardless of the sentiment shift back to economy reopening, or conversely, the world seeing the same type of stay-at-home environment we witnessed last winter months. While I'm still neutral on the traditional finance companies, since economy is not expanding aggressively and typically financial companies move in line with economic growth, I'm still seeing substantial upside in two companies in particular. So let's talk about them one by one. The first stock on my radar is Hannon Armstrong, ticker symbol HASI, green energy financial that's structured as a real estate investment trust. Who wouldn't like that in this type of economy with Biden taking office? It provides financing that tends to come with government financial guarantees that provides lots of cash for shareholders with credit protection. The company serves federal, state, and local governments, commercial, utility, and industrial markets. And that's big. I want financial companies that have government as clients. Think about that for a minute. Less defaults, right? Come on. 5-year return, 195%. 5-year revenue growth, almost 400%. 5-year earnings growth, 53%. 5-year dividend growth, 45%. Technically, price performance is off the charts, with the company continuing making strong upside momentum moves. Also, HASI is in the Russell 2000, which in my opinion has more upside than the larger cap indices due to it being weaker than the larger cap stocks due to Trump policies with China over the past few years. And the index continues to outperform the daily caps almost daily. I do believe we'll see more upside from HASI. That's right, HASI. And I like the fact that it's a REIT since they provide reasonable income via dividend as well. The next stock on my list, now I talked about this several months ago, and boy, oh boy, it's gone up since then. B. Riley, ticker symbol RILY. It offers full array of financial advisory services through its several wholly owned subsidiaries. It is an investment bank that provides corporate finance, research, and sales and trading to corporate, institutional, high net worth individual clients. It's got financial company has various divisions that provides opportunities for downturns in the economy, including bankruptcy workouts, including retail store closings, as well as other financial operations that cash in at boom times. The company also belongs to the Russell 2000, which, as I've mentioned before, is not overbought as much as the large indices. 5-year return on this stock, 263%. 5-year revenue growth, 745%. 5-year earnings growth, over 900%. And dividend growth, it's been going crazy. Overall, the stock continues to make new highs, and I'm expecting even more upside, even if the broad market becomes increasingly defensive, since this company profits in good and bad times. I hope that helps. Folks, what if I told you that the most important price indicators in the entire stock market triggered every Friday night after the markets closed, and that it could hand you thousands in profits every single week? It's true. This bizarre trading phenomena happens every single Friday at 4:01 p.m. Eastern Time without failure, regardless of what happens on Monday, Tuesday, Wednesday, Thursday, or even Friday. Man, that sounds great, especially if you have a busy schedule. A live trade prophet, head trader Josh Martinez and I have developed a proprietary trading system specifically designed to isolate these recurring market phenomena. Click the link at the bottom of this page to see how you can get in on potential profits. Do it now.